Hello, and you're welcome to Global Business Insights, where from a global perspective we discuss ideas, insights, and answers to questions in the fascinating places where finance, business, and culture meet. The latest data published by the Office for National Statistics showed the UK economy expanded by 0.2% over the month in August, having stagnated for the second consecutive month in July. Also, just in, the inflation rate in Germany decreased to 1.6% in September from 1.9% in August of 2024. South Korea's central bank delivered an expected 25 basis points rate cut to 3.25%, despite lingering concerns over high household borrowing. This cut came after the Bank of Korea held its benchmark rate at 3.5%. That's the highest level in 16 years for 13 consecutive months. CEO Elon Musk on Thursday, that's yesterday, unveiled the company's autonomous robotaxi vehicle during an event at Warner Brothers Studios in Los Angeles. The cybercab has no wheels or pedals. It costs under $30,000 and will be rolled out before 2027, depending on when it gets regulatory approval. AMD has launched a new artificial intelligence chip that is taking direct aim at NVIDIA's dominance with data center graphics processors. The Instinct MI325X, as the chip is called, will start production before the end of 2024. In France, Prime Minister Michel Barnier has proposed a budget for next year with some 60 billion euros in spending cuts and tax increases on companies and the wealthy as it seeks to narrow its widening deficit. In the proposed budget, some 440 large corporations with revenues above 1 billion euros would be hit by an exceptional tax lasting 2 years, with the aim of raising a total of 12 billion euros. Share buybacks would also be taxed. In the US, stocks yesterday were in negative territory as investors digested the latest stickier than expected inflation numbers as they awaited third quarter earnings from the major banks today. Later today, the Bureau of Labor Statistics will release the PPI, that's Producer Price Index, for September. The consensus is for the PPI to increase by 1.6% year over year from 1.7%, while the core PPI is expected to rise by 2.7% from 2.4% in August. Still in the US, the count of Americans filing for unemployment insurance saw a surge to the highest level seen in over a year. Analysts say Hurricane Helene and the ongoing Boeing labor strike distorted the trend, as we saw about 258,000 new unemployment insurance claims filed during the week of October the 5th, also topping estimates for 229,000 claims and an increase of 33,000 from the previous week. Fed watchers would have to factor in the effects of both storms and indeed the strikes ongoing at Boeing. On bank earnings out today, analysts see the latest Fed's half percentage point cut in September as having limited impact on Q3, and as such what will matter more could be the outlook for the fourth quarter and beyond. Oil prices inch lower, still set for a second weekly gain as Israel readied plans to retaliate against Iran, raising fears of disruptions to crude supplies from the Middle East. Global benchmark Brent was about $79 a barrel, more than 1% higher this week, while the West Texas Intermediate was below $76. Nigerians spend a staggering $10 billion annually on petrol and generator maintenance, according to a new report by Sustainable Energy for All. This exorbitant expenditure underscores the country's heavy reliance on fossil fuels for energy generation, despite significant challenges, and places a major burden on households and businesses, hindering economic growth and development. Looking at Tesla's robo-vehicles launch, most analysts believe it will take several more years for Tesla to roll out the robo-taxis in light of regulatory hurdles and questions about the safety of its self-driving technology, which relies on cameras and artificial intelligence to steer the vehicles. There are also rivals including Waymo and China's Baidu, and there are still issues with the technology, which depends on special maps to understand the vehicle surroundings. Also, while robotaxis show long-term promise, the immediate issue for investors is if Tesla will roll out a more affordable EV, the so-called Model 2, which will come under $25,000. Tesla shares have risen 45% since it announced its robo-taxi day in April, all in anticipation of the unveiling. Musk sees the new EVs taking company's valuation up as much as 7 times its current market value. Tesla shares were just slightly positive in after-hours trading. It will be interesting to see how this robo-launch affects its shares when markets open. Many analysts say they still see little change in the opaque immediate-term earnings prospects, which tends to matter more with investors. The inflation rate in Germany, that's CPI, compared to the same month last year was 1.6% in September 2024. In August 2024, the rate change had already fallen below 2% at 1.9% after 2.3% in July 2024. According to the report just out, the last time the inflation rate was lower than in September 2024 was over 3 years ago in February 2021, when it was 1.5%. Ruth Brand, president of the Federal Statistical Office, said the renewed price declines for energy dampened the inflation rate in September more than in the previous months. In contrast, the continued above-average price increases for services had an inflationary effect. In the UK, there was a bounce back in construction, and a strong month for accountancy, manufacturers and retail businesses helped to boost the economy by 0.2% after it failed to grow in the previous 2 months. But the Office of National Statistics still says economic growth is weaker compared to the first half of the year. The Dow Jones Industrial Average lost on some of the week's earlier gains after the U.S. Consumer Price Index inflation data from September failed to meet market expectations. U.S. initial jobless claims also accelerated, flashing yet another warning sign. The headline U.S. CPI inflation did tick down to 2.4% year-on-year in September, easing back from the previous 2.5%, but higher than the expected 2.3%. Analyzed core CPI also ticked higher to 3.3%, higher than expected 3.2%. The monthly inflation rate continued to be relatively benign, measuring just 0.2%. On a monthly basis, core inflation was 0.3% last month, the same pace as August. The stickiness in core inflation, however, was due to components like airfare prices, while the shelter component of the CPI moderated considerably to 0.2% in September from the surprisingly strong 0.5% monthly rate we saw in August. While economists don't see September's larger than anticipated gain as a signal that inflation is accelerating, it takes another half percentage point cut off the table. The stickiness that threatens market hopes for a faster, deeper pace of rate cuts from the Federal Reserve, even though for now the latest economic data isn't likely to deter Fed officials from cutting by 1/4 percentage point at their upcoming November meeting. Also, it seems the Fed's focus has shifted, with more emphasis on labor conditions these days, and the jobless claims data could be more influential on Fed thinking. Wall Street will today get a fresh glimpse into the outlook for the biggest banks as the Federal Reserve starts dialing back interest rates and uncertainty continues to shadow the economy. JP Morgan Chase & Co. and Wells Fargo & Co. kick off the quarterly earnings report cycle today, and then next week we get Citigroup, Morgan Stanley, Goldman Sachs and Bank of America reporting. Market optimism will be tested by the reports as we saw U.S. bank stocks higher almost 10% in Q3. The question will be if too much positive news on the economy was priced into expectations as executives are cautious in their views on the outlook. How will Fed rates coming down from a 2-decade high affect consumer appetite to borrow, net interest income? How will it affect loan and deposit growth and credit quality? These are some of the questions, hopefully, that will be answered. The drop in interest rates isn't entirely negative to banks, since it can also fuel demand for bond sales, consumer borrowing, trading, and other activity that fuels profits. Analysts also say investment banking fees may be one bright spot as more M&A activity is driven by cheaper financing costs. The main theme could be recovery in consumer spending and loan growth as the US avoids a recession, and if the executive narrative and reaction of bank stocks reflect the optimism or shows more caution on the outlook for the economy. China stocks led declines in Asia-Pacific markets today after key Wall Street benchmarks fell overnight as investors are digesting the sticky US inflation and keep an eye on the geopolitics. Hong Kong markets were closed today for a public holiday. Investors in Asia also assessed a rate decision from the Bank Korea, with the Bank of Korea cutting by 25 basis points, as we said earlier. The decision comes as inflation in South Korea eased to 1.6%. That was in September, the lowest level since early 2021. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Again, thank you so very much for watching. Bye-bye.